Unilever's first half performance, a recap and outlook for 2025. Here's why this half-year report could be the turning point you've been waiting for, and why Unilever's cocktail of steady growth and strategic pivots shows resilience in uncertain markets. CEO Fernando Fernandez starts with a confident declaration. Our first half performance proves we're stronger than ever, defying market headwinds with a 3.4% underlying sales boost across all business groups. But what if this isn't just a reaction to challenges, but a deliberate strategy to outmaneuver competitors? Let's break down what really matters and what could change everything. The core numbers. First 6 months of 2025, 3.4% growth. Each quarter built on the last, peaking at 3.8% in Q2. Volume and price lifts balanced out, signaling demand-driven expansion. But here's the shocker. Even as global economic conditions tighten, Unilever's betting heavy on emerging markets, with India accelerating to 5% growth in Q2, despite prior struggles in countries like China, low single digit, and Indonesia, 4.8%. Why take that risk? Because emerging markets hold the future, but not all. While Latin America scraped along, Asia shows signs of recovery. China may have dipped, but Unilever's seeing improvement in Q2. Could this be the start of a new growth wave? The divided world of markets, developed versus emerging. The split is stark. 44% of turnover comes from stable, high-volume growth regions, 4.3% growth, while 56% face pricing pressures. But Unilever's not playing defense. They're launching premium products like Dove's Hair Fiber Repair. Profitability puzzle. Underlying operating profit. 5.8 billion euros, negative 4.8% YY. Gross margins held at 45.7% despite inflation, but operating margins dipped to 19.3%. The money's going back into brands. Marketing investment jumped 40 BPS to 15.5% of turnover. But should shareholders worry about squeezed profits or celebrate the reinvestment? Ice cream, the bittersweet spin-off. The Magnum Ice Cream Company is about to split off. On paper, it's 5.9% growth, 3.8% volume, 2% price looks sweet. But behind the scenes, operational separation is complete, and Unilever retains a 20% stake. What does this mean? Prices of Magnum and Cornetto may rise, but maybe that's the price of freedom. Hold your breath until November. Strategic shifts. 1. Beauty Wellbeing, 21% of turnover, 3.7% growth driven by Wellbeing. Liquid IV and Nutrafol are on fire. But beauty itself struggles. Is this a sign of shift? Personal care, 22%. Dove shines with high single-digit growth, but Latin America volumes take a hit. The question, can science-backed innovations offset market turbulence? 3. Home care, Europe thrives, Latin America falters. The real story? Cif's probiotic launch and fabric enhancers surge show innovation isn't optional. 4. Foods, 22%. Flavor mayo and Knorr lead a 2.2% climb, but China's decline poses risks. Can Hellmann's global expansion counterbalance local challenges? 5. Ice cream, 15%. Magnum's Utopia and Cornetto's disc cones prove indulgence sells even in tough times. But margins dipped due to cocoa costs. Profit versus passion. Which wins? What's next? For 2025, Unilever promises 3 to 5% growth despite macroeconomic chaos. Emerging markets will drive acceleration, especially in Asia. But the real test? Can they maintain margins? H1 saw 19 tightrope walking, the big moves, acquisitions, minimalist beauty brand, Wild, sustainable deodorants, Dr. Squatch, men's care. These aren't just purchases, they're signals of Unilever's bet on niche markets with premium margins. Productivity push, €650 million savings by year-end ahead of plan. What does this mean? Leaner operations. But how does that impact product innovation? Your turn. Controversy alert. Is Unilever right to double down on emerging markets amid currency instability? Or should they focus on sure-bet developed regions? Does ice cream's independence benefit both companies or create vulnerability? Dive into the numbers. But consider this. Behind the stats lies a company willing to gamble on growth strategies others avoid. Would you invest in this roadmap? Unilever exceeds Q2 sales expectations. 3.8% growth in 2025 earnings. Unilever surprises with stronger than expected sales growth. In a remarkable turn of events, Unilever has reported a significant increase in its underlying sales, surpassing analysts' expectations for the second quarter. This consumer goods powerhouse, known for its popular brands like Dove soap and Knorr stock cubes, has demonstrated impressive volume growth across all its business segments. The company revealed that its underlying sales, which are adjusted to exclude the effects of currency fluctuations and one-time events, experienced a notable rise of 3.8% during the quarter. This growth was primarily driven by robust demand for its leading brands, showcasing the strength of its product portfolio. However, it's important to note that the overall turnover for the European division saw a decline of 4.6% compared to the same period last year, amounting to €15.4 billion, approximately $17.57 billion, as stated in their earnings report released on Thursday. This situation raises intriguing questions about the dynamics of consumer behavior and market trends. Are consumers gravitating more towards established brands during uncertain times? Or is this growth a temporary spike? As we delve deeper into these results, it becomes clear that while Unilever's underlying sales are on the rise, the drop in turnover could indicate underlying challenges that the company may need to address. What do you think about this contrast? Do you believe that Unilever can maintain its growth trajectory, or are there potential pitfalls ahead? Share your thoughts in the comments.